Ladies and gentlemen, welcome back to the channel. Welcome back to a weird day on Wall Street. It is a mixed bag out there. If you're looking at the headline S&P, it's not a bad day, but a lot of growth stocks are getting pretty hurt today. I mean, just look at your portfolio. There's probably quite a few stocks that are down a lot. I will explain why that is here in this video. We did get a speech from Fed Jerome Powell. I will share the headlines with you. Most importantly, though, Walmart reported earnings, and there was some good things and some bad things. We will go over that, but it's the inflation pressures that could come, long story short, that are likely hurting your higher growth stocks today. That's important. Now, we did get some data today, initial jobless claims, retail sales, and PPI, in which that was, pretty good across the board in terms of the economy and the consumer. So we have a lot of work to do. Ladies and gentlemen, hit that like button and subscribe to the channel if you have not done so already. Let's get started. So first and foremost, let's start with Walmart earnings, because I actually believe this is the most important thing of the day today, even though, again, you had a speech from Powell, you had retail sales, all of that. Walmart is the bellwether of the economy. Walmart is the economy. Okay, and what they have to say here is very important. Walmart CFO says price hikes from tariffs could start later this month as retailer beats on earnings. It's really the commentary that is important. I give a crap less about what the earnings are or any of that. In an interview with CNBC, Chief Financial Officer John David Rainey said tariffs are still too high, even with the recently announced agreement to lower duties on imports from China to 30% for 90 days. Quote, he says, "We're wired for everyday low prices, but the magnitude of these increases is more than any retailer can absorb," he said. "It's more than any supplier can absorb. And so I'm concerned that the consumer is going to start seeing higher prices. You'll begin to see that likely towards the tail end of this month, and then certainly much more in June." Walmart said it expects net sales to increase 3.5% to 4.5% for the fiscal second quarter, but declined to provide guidance for earnings per share or operating income growth because of fluctuating U.S. tariff policies. Okay, it goes over the earnings there, blah, blah, blah. Doesn't really matter. Comparable sales jumped 4.5% for Walmart and 6.7% for Sam's Club, excluding fuel. So the numbers themselves were good. It says here, Walmart is often seen as a barometer for the health of the U.S. consumer because of its thousands of stores and large customer base that cuts across age, income, and region. Rainey told CNBC that Walmart has not seen a noticeable shift in consumer behavior from previous quarters. Boom. That is massive. Okay, let me repeat that. Rainey told CNBC that Walmart has not seen a noticeable shift in consumer behavior from previous quarters. Quote, they're discerning, they're mindful, they're maybe a little concerned about possible looming price increases, but their behaviors largely have not changed. They're still looking for value, he said. Sales in the quarter were a little choppy, Rainey said. He said results in February fell below the company's expectations. March results came in closer to what Walmart expected, and then April was a lot stronger. So far, he said, May feels a lot more like April with sales patterns. So things are actually accelerating a bit from April and now into May. Okay, that is a good sign because so much of this economy is, dependent on people spending money. Okay, this is huge news. Okay. And I think, again, if Walmart had bad things to say about the consumer, that's a big red flag. The fact that they're saying consumers are actually accelerating in April and so far in May, yeah, that's better than any other data point you can get on the consumer. Now, in an interview with CNBC on Thursday, Rainey said the company is working with vendors to try to keep prices down, but he added that this is a little unprecedented in terms of the speed and magnitude in which the price increases are coming. Still, he said Walmart plans to play offense by keeping its price gaps below competitors. He said the company will absorb some of the higher prices from tariffs and expects suppliers will too. He said Walmart has not canceled any orders, but has reduced the size of some purchases. For example, he said it is buying less of items that it anticipates may sell less because of higher tariff-related prices. So that's the bad, right? Consumers doing good. That's good. The bad news is Walmart says, yeah, we're going to have some inflation coming very soon. Now, Jerome Powell today pretty much said the same thing. Here are the comments. Fed Powell says officials agree that strategic language around both shortfalls of employment and average inflation need to be reconsidered. Powell says the April PCE is likely around 2.2%. He says the framework needs to be robust to many circumstances, including a world where supply shocks may be more frequent and persistent. So they're just really starting to speculate here. Let's be honest, that maybe we're going to have more supply issues from now on. We don't know that. That's an opinion. Powell says the Fed is undertaking a 2-day review of revisions to its framework adopted in 2020. Powell says that zero lower bound still a risk and should be addressed in the framework, though it is no longer a base case given current level of policy rates. He also says that revisions to Fed communications are also being considered. That's interesting. Fed Powell says the idea of a moderate overshoot of inflation following weakness became irrelevant given the levels inflation reached. Powell says that certain aspects of the Fed's approach are permanent, such as the focus on inflation expectations. So he's saying other things can change, but that's not going to change. Maybe the Fed, is considering like tweaks to their, how often they speak, could be moving the target for inflation or having discussions of should that be moved now that the economy is pretty well different compared to the 2010s. Again, here is that Powell says it is appropriate to reconsider average inflation targeting. So again, if you have an average inflation target, and, inflation's almost 2% today, fine. You can let it be a little higher. And then during other times, it's going to be a little bit lower, but it should average 2%. Also in the news today, according to a senior Iranian official, Tehran has not received any fresh U.S. proposal to resolve outstanding differences in the nuclear dispute. And this senior Iranian official says sending uranium enriched above 5% abroad has always been part of nuclear talks with the U.S. Also in the news today, China to tighten control over AI data centers. China is clamping down on AI data centers. That is a clear signal for deeper tech decoupling. Global players could face higher cost and logistical headaches as cross-border data flow gets hit, forcing them to localize stacks or risk compliance fallout. Trump's trade war risks a U.S. capital flight, warns hedge fund Elliott. India says they are working with the U.S. in a direction of joint statement on trade. Russia's delegation says they are ready to discuss compromises at talks with Ukraine. U.S. Secretary of State Rubio met with French, German, Italian, and UK foreign ministers in Turkey. Hopefully, maybe could be a little bit about trade. We'll see. Europe needs to get a trade deal done. EU's trade chief Shefcovic says U.S. Commerce Secretary Lutnick and I agreed to accelerate discussions on trade. And he says that he had a good conversation with U.S. Commerce Secretary Lutnick on trade. Trump's rush for AI deals in the Gulf opens a rift with China hawks. Some Trump officials want to slow NVIDIA and AMD sales to the Middle East, according to sources familiar. Jamie Dimon of JP Morgan on recession odds says, quote, I wouldn't take it off the table. Now, as far as the economic data, PPI month over month on a headline, look at this, came in at negative 0.5%. The last month was revised up from negative 0.4% to 0%. So you came in much lower than the expectation today. Retail sales month over month on the headline was actually revised higher last month from 1.5% to 1.7%, you can see here. And guess what? The expectation was 0%. we came in at positive 0.1%. That is reaffirming the consumer continues to spend. That is reaffirming we are not in a recession. And people are likely overplaying the damage that is done in the economy. We'll see what happens with inflation. You know, I think the consumer, again, like Walmart said, they're looking for deals. You're not going to be able to pass on a lot of costs to the consumer. I don't even know if it will actually get picked up in the CPI data because the way it's calculated. You may not see much of a rise in CPI at all. But again, time will tell. Initial jobless claims today came in line with expectations at 229,000. That was literally the expectation, and the same as last week. So not, you know, that's still kind of high, but not a problem, I would say. New York Empire State Manufacturing Index came in at negative 9.2, actually better than the estimated negative 10. Philadelphia Fed Manufacturing Index came in at negative 4, way better than last month's negative 26.4, and a lot better than the negative 11, which was expected today. Retail sales control group month over month came in at negative 0.2%. That's a little bit worse than the estimated 0.3% positive. And retail sales excluding autos month over month came in at 0.1%, worse than the estimated 0.3%. Now, Philly Fed business conditions came in great, 47.2. Last month was 6.9. CapEx index came in at 27, way better than 2. That was the last month's number. Employment came in at 16.5. Last month it was at 0.2. New orders came in at 7.5. Last month it was negative 34.2. And prices paid, did shoot up as well to 59.8. Last month was at 51. But on net, that looks pretty good. Industrial production month over month came in at 0%. That missed estimates of 0.2%. Capacity utilization actually came in lower than expected at 77.7. The expectation was 77.8. Business inventories month over month came in at positive 0.1%. Expectation was around 0.1%. And the NHAB housing market index came in sharply lower than expected as the spring selling season is not off to a good start. It came in at 34. You were expecting 40. So, I mean, you're at the lowest level you've seen in the last year. You're getting close to the lowest level you've seen in the last 3 years. And again, if you kind of just look at the last 10 years, real estate is still in a very much depressed place. The CNN Fear and Greed Index today largely unchanged from yesterday. You are coming in at 71. Yesterday, you were at 70. Market momentum, extreme fear. Stock price strength is greed. Stock price breadth, extreme greed. Put and call options, greed. Market volatility is neutral. Safe haven demand, extreme greed. And junk bond demand in extreme greed. Now, what some of you guys pointed out in the video yesterday is yesterday's market, you didn't have the greatest breadth, okay? There was breadth divergences where some sectors, some stocks were doing way better than others. Today is the exact same story. The headline S&P is up 0.1%. If you look at the RSP, it's up 0.35%. That is the equal weight S&P, okay? Or like the average stock. But, if you look at growth, I mean, those are not doing as well. Meta's down 1.3%. Amazon's down 2.7%. Google in the red barely. Nvidia's down 1%. APLD down 6%. Apple down 0.2%. There is, definitely some breadth divergence that is taking place today, which is different from what we've seen. Not a huge red flag at this point, but if we do start to see certain areas really outperform, it is a sign that the market is slowing down overall. Although, again, with Walmart earnings, you can't really be bearish on the consumer or the economy with the data that we got today. That's the bottom line. You can be a little hesitant because inflation is going to come to some degree. Question is that going to get picked up in CPI? Is it going to slow down the consumer? Probably not. It's not going to be like 2022 levels of inflation because why? You're not going to be able to raise prices without hurting demand. There's something called demand destruction, okay? And I know this gets a little complicated. I'll try my best to just say it as smoothly as possible. Demand destruction. Okay, imagine it like this. You work. Let's say you get paid $10 an hour. Cool. You get $300 every week. Great. Your pay is not changing. Imagine it like that. People's pay right now, yeah, sure, it's like average. It's going up a little bit here and there. It's not like 2022 where everyone's getting a raise again. Okay? So imagine that burrito that you love from your local restaurant that's $10. Great. You buy it. Imagine next week it's $15, but you didn't get a raise on your check. You may still buy it, but you may not buy it as often. Imagine if that burrito goes to $20. Again, you may buy it, but you're not going to be going nearly as often as you would if it was $10 or $15, okay? That's kind of the point that I'm making. People are not getting raises like crazy right now. They're not getting stimulus checks right now. So companies cannot largely just increase prices. You will get demand destruction as prices go up. And businesses will lose on net when they raise prices. That's the fact of the matter. You may get a lot of shrinkflation, where the products that you're actually buying you're buying less for the same price. That is definitely possible. And that's something more or less I would be expecting from this. And look at that. We do have a new AI investor sentiment survey. That is what I'm talking about here. We're back to something a little more normal, but again, far from, normal, if you will, or bullish. Bullish investors, 35.9%, the highest level we've seen since at least February. Neutral investors at 19.7%. Bearish investors at 44.4%. So bearish investors still outpace bullish investors by about 9%. But this is the lowest number you've seen throughout this crash or correction so far. So people are starting to get a little bit more bullish. But again, if you're looking at this as a reference to, our markets overextended to the upside, is there more room for stocks to move higher? The easy answer is yes. People are not overly bullish right now. If anything, I think people are overly bearish in their expectations. Even the Fed. I think the Fed is way too, negatively viewing of inflation right now versus the reality of what we're going to get. And that's just my guess. That's what I think. I could be wrong. Maybe inflation is going to be a lot worse than we all think. Okay. I'm not in that camp. That's not my view. Okay. I think largely Wall Street is way too bearish on the state of the economy. I don't think it's going to be nearly as bad as we think. And maybe these trade deals could actually be a positive for U.S. earnings. Okay. Inevitably over the next couple of quarters. Maybe deregulation and lower taxes could be a bigger positive force than most people expect. Just, again, my view. But let me know what you guys think about this down below in the comment section. Have a great rest of your day, and I will see you in the next one.